Good morning, everybody. Welcome to my channel. Today I'm going to talk about foreign exchange market. And the foreign exchange market means, it simply means you're going to exchange your native currency to a foreign currency. Whenever you change your dollars, your Indian rupees, or your Japanese yen, whatever the operations, those operations called the foreign exchange operations. And it all happens in foreign exchange market. So let's move further ahead and let's understand what's the meaning of foreign exchange. So as I already told you, the foreign currency, whenever you exchange your native currency to a foreign currency, that's called the foreign exchange. And the other thing is very important here, that's the exchange rate. So the exchange rate is a key factor where you have to make money, or traders are making money, or bankers are making money, or your local store owners, Western Union guys, they can make money. All of them making money with the foreign exchange, the exchange rate. So to understand better the exchange rate, what is the exchange rate is, suppose you have one Canadian dollar, or suppose you have one Indian rupees. So think about simplicity. You have 1 rupees, Indian rupees, and you are going to Japan. And in the Japan, you're not going to use your Indian rupees at all, because they're gonna use your local currency, and you have to use your local currency as well. So what are you gonna do? You have to change your Indian rupees to Japanese yen. So in order to change that and find out the best exchange rate, you may go to a bank, you may go to any broker, or you may simply just Google it and find out what's the right now or current exchange price for 1 Indian rupees to Japanese yen. So I already do the calculations here. So 1 Indian rupees is equal to 1.74 Japanese yen, and you can see a little graph here as well, where which year it drops, which year it's go back, which year it's drop, which year it go back. So it's just kind of a forex chart. We're gonna talk about it later, but for right now, just think about the exchange rate. So you had the 1 Indian rupees, and you just exchange your Indian rupees to Japanese yen, and in Japanese yen you receive 1.74. It means you get 74 points more, or 74 Japanese point 0.74 Japanese more. So that's all we call the exchange rate. Whenever you exchanging your currency, your native currency, to a foreign currency, that's we call foreign exchange operations. So let's move further. Okay, according to Hartley Witters, foreign exchange is the art and science of international monetary exchange. So the same thing, is just a little quotes from Hartley Witters, one of the very good traders in the past time, and he he wins a lot of prizes, but we're not talking about him. The main focus is you guys really understand what's the foreign exchange market is. So the another definition or another advantages of the foreign market exchange is, or I'm not gonna use the foreign exchange market, instead I'm gonna use the forex. The forex term is represent the foreign exchange market, and it's very simple and easy to pronounce as well. Okay, so the forex market is the world's largest financial market, over $4 trillion. And $4 trillion, you can think about the $4 trillion, man, so many zeros are there. Okay, and it's more than billion anyways. So $4 trillion worth of currencies are traded each day, and that's traded each day, not in a month, not in a year, every single day. And for your information, the forex markets is just like a stock market, but stock market is usually open in a certain time. So let's suppose like stock market or Bombay Stock Exchange, they opens 9 or 10 o'clock and they close 5 o'clock. So technically you don't have much time to take the traded, to make the exchanges and or make the profit. Wherever the forex markets is worldwide and it's open 24 by 5. It means it opens 5 o'clock Sunday to 5 o'clock in the Friday, 24 by 5. So 5 days a week. It's a good opportunity to work part-time, or you can make your trade. Well, anyway, we're gonna talk about further. We're gonna talk about it later, don't worry about that. So The amount of money traded in a week is bigger than the entire annual GDP of a United States. Oh, guys, that's make a really good story here. So, $4 trillion traded each day. That means it is more than the gross domestic products of the United States that happen annually, like in 12 months. So, everybody's a lot of opportunity to make money every day, every second, every minute, every hour. So, the third thing is ours. The main currency used for forex trading is the US dollar. So the base currency for the forex market is US dollar, and anyways some people they trade it in Swiss franc or in the euro and British pound, and for the Indian people or like for the India they use it for in Indian money. So that's just apart from the basic thing. So just focus on the basic thing first. Let's move further. Foreign exchange market. Foreign exchange market is that market in which national currencies are traded for one another. The major participants in the markets are commercial banks, forex broker, authorized dealers, and the monetary authorities. Besides transfer of funds from one country to another, speculation is an important dimension of foreign exchange market. It's where money is in one currency exchanged for another. So that's all you can read from here. But the main thing is here, actually you don't have to go anywhere to exchange the currencies. Everything is just happens online. You have the brokers, you have online brokers, you got the banks, and everything is connected, just a kind of a circle or just kind of a small web. So once you jump into the market, then you can understand what's the what's the foreign exchange market is, or what's the forex is. So let's move ahead. Let's see what's the next one. So now we're going to talk about the advantages of forex market. So it's already the world's largest market, still growing quickly, as I already mentioned. Yeah, it's one of the largest market. So it makes extensive use of information technology. It means you don't have to physically exchange the bills, physically exchange the notes. You don't have to go and buy the US dollars in any physical form. You can do it online. uh, just everything is just digital currency, digital numbers. So traders can profit from both and strong weak economies. So that's a very important part. In stock exchange, if your economy is really weak, you got very less chance to make a profit, and your risk is really high. On the other hand, if you're trading the currencies, your chances are really good that you can make money from a weak economies are from there. So the weak economies are, suppose Pakistan is a weak economy anyways, Sri Lanka is a weak economy, or I can say the less growing economy as compared to Brazil, India, Vietnam, Indonesia. These are the kind of growing more than these countries. So you can technically you can make profit from the weak economies as well. So the next point here is traders can place very short-term orders which are prohibited in some other markets. That's another very strong point here. That's another very good point in a forex market. In stock market or accommodates or in the bonds markets, where sometimes, or let us suppose your mutual funds, your very popular mutual funds, or your FDs, fixed deposits. So your banks, they need a certain amount, they just make a contract with you. You guys deposit 1 lakh rupees or some kind of like 10,000 or maybe 20,000 rupees, and you have to keep that money in a certain time, like suppose for 3 years or 5 years or maybe 2 years, and on that money they give you some kind of interest like 2% 3% annually, and after 3 years your funds are safe and your funds are you're able to withdraw the funds. But you never think about that in those 3 years your 10,000 becomes some kind of 10 million rupees that the bank never gives you. The banks, the brokers, they use your money to make money for themselves, and they give you a little coins, just a small part of that, just like a 1% part, and that's nothing. Okay, let's move to another point. The market is not regulated. The market is not regulated means it's the funds you're actually earning from the market, You don't have to show their funds in a tax returns. You don't have to show the funds in either in a gain capital